While the QE printing press rolls on, the market has shown resilience even in the face of the situation with North Korea. And helping the rally, the Treasury Secretary yesterday said the White House has a very detailed tax plan ready that will be released to the public by the end of September. So that obviously was good news for the markets. And we also had the GDP number come in ahead of expectations, which bolstered the case for the Fed to hike rates before the end of the year. Came in at 3% instead of 2.7%. And yet, interestingly, the odds based on CME Fed Watch showed a drop to just 36% now that the Fed would hike by December. If you all remember, it used to be up around 55% in the prior weeks. So, in other words, a Fed that's reluctant to hike suggests that things are still unwell or getting worse. And Tom Basso suggested this all the way back in 2012 when he was on Michael Covell's trend following interview. And for those who don't know, Basso was one of the originals interviewed in Jack Schwager's Market Wizard book. He's had huge success in the markets over the decades, and he continues to trade. And he continues to trade the way he's always traded, which is a fairly low-risk trend-following style. So anyway, he said that QE would eventually lead to a serious bear market of a magnitude greater than 2008, with a sustained period of elevated volatility. And that's no different than what a lot of others that have respectable credentials have forecast. So it's just a matter of not if, but when this big sovereign debt bubble bursts. In today's news, we had the monthly jobs data, and that came in weak. And we saw that gold has been trending higher over the last several weeks, as it's known as the fear trade. And the situation with North Korea remains on edge as China plans to use them as a proxy. As it's to their strategic interest to pressure U.S. and its allies without triggering a war between the U.S. and China, as China rises in power to surpass the U.S. within the next few years, economically speaking. And in addition, we've got the highly questionable economic data that rolls in as the global economy overall continues to remain weak, and QE money printing presses continue to roll on at record levels. So there's a lot out there that could certainly prick the bubble, but when you have all the central banks printing en masse, that money has to find a home, and it tends to find a home in U.S. stocks. So that props the market, and the S&P remains at record levels in terms, and I'm not talking about price-wise, I'm talking about in terms of meaningful corrections. This is the first time since it was formed in 1957 as the S&P 500 that it has corrected less than 3% all year. So at any rate, if you look at the stock demographics, you'll see that the leading stocks have managed, some of them anyway, have managed to hold their own, while others remain below their 50-day moving averages. You've got Netflix, Google, Amazon as part of the FANG foray that are attempting bounces off of or back up toward their 50-day lines. While you've got Facebook and Apple that remain near new highs. So you kind of have a bifurcated situation with the FANG names. Over in the Chinese group, we've got a number of names, as we discussed last week. They've been pummeled. They're licking their wounds. A few have managed to buck market weakness, though I would say more of them have had their gap downs. But the ones that have bucked the trend would be the ones like BABA. We've had that on our list for quite a while now, the focus list. You've got some others that are worth watching, like At Home, ATHM. I keep going back to the old name, Auto Home, which is near new highs, and then you've got Sina and WUBA. Those are both Chinese names that are also near new highs. And And you see on the Russell 2000 that it's bouncing after being clocked hard. It's making its way back above the 50-day here, but it's lagged the larger cap NASDAQ all year. And for those who aren't familiar, you probably are, but the Russell 2000 is considered a risk-off, rather a risk-on index. In other words, when it's perceived that the risk is less, then fund managers are going to go ahead and be more likely to prop up the Russell or buy into the smaller, riskier names. But the Russell 2000 has been lagging for several months. If you look at it compared to any of the major averages, it's severely lagging, actually. And it suggests institutions have been less willing to risk capital in these smaller names. But I would argue that this has actually been true since 2014. So we're looking at 4 years of lagging action, and it's simply because of, it goes back to what Tom Basso said in 2012. He was, and Ed Seykota wrote Gavopoly, I think, in 2012 as well, 2013, calling for a collapse or a bursting of this bubble that by that point had grown fairly large. So essentially, it's just a matter of when this all comes crashing down. And interestingly, in the interview, Basso said since he's a trend follower, and since for the trend followers that follow the discipline, once we get this bubble bursting, and you could look back to 1929 or 1987, 2008, 2000 to 2002. He was saying that the trend followers are going to clean up because they're not going to try to fight the market. They're going to go along with the trend. So when we get a steep downtrend, they're going to clean up. But his concern was that this time is going to be so much worse than anything the market's ever seen, that it's going to be like, well, gee, fine. So I'm stinking rich from my trade, but look at the rest of the world. And it's an interesting interview that he gave with Michael Covell back in 2012, because it certainly forecast, well, it still remains in waiting. I mean, all these well-respected brains out there have talked about the bursting of the bubble. So all that said, the UVXY 620 trade remains a viable one, although as we all know, this year, the first quarter, a lot of money was made just selling volatility as it started to plumb new lows or near new lows, and then it plumbed even lower lows, trading between 9 and 10 over the last few months, and it looks like it's heading back that way again. Where's the VIX right now? We've got it right at 10 actually, and it's come straight down from 17 over the last 3 weeks. So the thing is, QE or not QE, QE so far looks like it's not going to be slowing down anytime soon. I think, what was it, the Bank of Japan, Bank of England, and the ECB have all pretty much chimed in that Japan was saying that their economy is still really weak and they don't forecast growth anytime soon. So in other words, they're going to have to keep printing money at record levels. ECB said something similar. They said they said they're going to remain watchful, but but the economy still is very fragile. And of course, Bank of England's tied in with them more or less. So I think that obviously the best thing to do is what we've been doing all year, and that is watch for these undercut and rally formations, watch for the volume dry ups, watch for pocket pivots, and then buy on the weakness, or maybe if the pocket pivots coming up through 50 days. And we can talk about some of this stuff today, as usual. And with that, I'll hand it over to Gil.
Oh, cue the trumpet music. I think this market is really bizarre, to tell you the truth. It's like things are looking pretty grim as of Monday, when you had more news of North Korea shooting missiles again, this time over Japan. So do you have any relatives still there, Dr. K? Yeah, they're over in Osaka and Tokyo. What do they think about missiles flying overhead? Are they excited about that, or is it just business as usual?
They have, Japan as a country has been in a 27-year recession, and I think the biggest problem there is just a lot of these companies have been struggling. My uncle's company was struggling for a long time, and you know, that's just the way of life over there. They have a lot of worries on their plate.
So that's just another one. All right. Well, anyways, what you got going on here is this sort of reversal. This is actually a bullish outside reversal to the upside. Anybody who follows me on Twitter will recall that I pointed that out. And so you, at that point, you're looking for stocks in positions where you can pick them off. And I would say I don't like to buy strength. So coming into things here, I think is dumb. And I don't really, to tell you the truth, I don't really consider this an investor's market as much as it is a trader's market. And I think it's proven itself to be that way, particularly when you see the indexes like the NASDAQ just doing this kind of stuff. And you do get a nice move here, and that was led by big cap stocks, big NASDAQ 100 stocks, and then you get into this garbage. Wow, what happened there? How did that magically shift like that? There must be something going on, maybe some gremlin in here, but it's just chopping around. Now we're back up near the highs, so at this point, I think we'd want to see what the market looks like on a pullback. I think I made a big mess here. In here, and maybe it does hold and set up. I don't know if we're going to shoot out. Maybe we will, but I would be very skeptical of chasing anything in this market. So, and for the most part, I think you could see that there was a logical basis for the rally on Tuesday. You had news, but one thing I noticed, for example, I've been playing Momo on the short side, and this is what kind of ticks me off too, is that it comes all the way down to the 200-day line. So that's a cover, and that occurred on Tuesday. And it reverses and heads back to the upside. So I actually went long it in here, and then I sell it up here, and of course it keeps on going a couple of bucks higher just to piss me off. But that's what makes this so difficult to play. If you're going to jump in on the long side, you don't know if this is just a reaction rally or whether it has more legs to go an extra few days, which it has. And I find that difficult to play, although, you know, you can pick off some things. Like I figured, okay, if the market turns, you're going to see Netflix pop off the 50-day line. And of course, I think I pointed this out last week. Wow, look at that, now it changed to gray. I think I like the gray better. In any case, you know, you bounce off the 50-day line, you run up higher, now it's just getting thicker.
Yeah, you use the gray because then it doesn't blot out the
You like that?
finer
Oh, I think I just did it again. I don't know what I did. Yeah, it's still gray. So don't ask me how it got that way.
Use gray because you can actually still see the
okay, so you can see this, and hopefully you can see the gray lines. But so you get this rally, but notice how where you're coming up to is up into the Bible gap up day low, and you're filling this little gap here. There's a little gap right there, so you're coming right in there. So I would expect this to pull in. So obviously I'm not going to buy this thing up here. I thought it was buyable here, and then you got a pocket pivot on Wednesday coming up to the 20-day line. And I guess you could say it's off the 10-day line since it gapped up a little bit there. But that's what you get. And that's a decent trade if you can play it. But I don't know if this necessarily means that Netflix is going to set up again and just launch higher and break out. So that's what you get. That's sort of a random trade. Oh, now it's black. Oh, I love it. Let's try this now. Okay, still black.
Got gremlins in there.
Don't ask me how this happens. This thing is just changing all by itself.
Mind of its own.
It's a great little program, though. It's called, oh, I forget what it's called. Let's see. And it's free, actually, and it's called Epic Pen. And it's free, but if you're using it for commercial purposes, you're supposed to contact them to pay for the software. And I've been trying to contact them because I'll pay them for the software. It's very useful, I think. You can use it for presentations, but I can't get in touch with them. Anyways, so what else is hopping and bopping? Any questions on any specific names? I think the ones that we have left on the list, ANET, I don't think I'd be buying this one up here. The one thing that's a little bit disturbing, these guys are in the telecom space, but I guess it's a different area. You're not getting any movement in applied opto, so you would think that if you've got a strong upside reaction rally in the general market here, that you might see this guy head back up to the 50-day, which is up here. And the reason for that is you've got a left shoulder, and whoa, what happened there? My mouse kind of skidded there, and I went flying across the desk there. Okay, here we go.
Morning, Martinez.
Maybe the mouse has had martinis. But anyways, you sort of have this head and shoulders thing forming here. So you would think you might get this reaction rally back up into the 50-day moving average. So, and of course, this is one stock that I bought thinking I might get that move on Tuesday. And of course, it doesn't pan out. So the better ones were things like, I noticed Baozun came back. That was on our list before. But it's right up into the 50-day moving average. So now you got to ask yourself, is this thing a short here? And maybe it is. So, you know, we've got Appian is still on the list. That's an IPO, but it's up near its high, so you're not going to buy it. But it was hanging along the 20-day moving average, the 10-day moving average, and had a pocket pivot, I believe, here, which I think is this day, and it's gone higher, but I'm not going to buy it up here. It's a thinner name. It only trades like 250,000 shares a day. So it's a bit on the thin side, not really something suitable to my taste. But somebody with a smaller account can mess around with it. Nutanix looked pretty good, hanging along the 20-day line. They gapped up today on earnings, opened above the 200-day moving average, and now it's trading down here below the 200-day moving average. So I'm not going to touch this thing. This doesn't look right. So another one, actually, I shorted this one, and maybe you guys think I'm crazy, although I am making money on it right now, but not much, maybe $1 or $2. Is, believe it or not, is Palo Alto Networks. Maybe I'm all wet here. They just gapped this thing up, and I was just watching it on the 620 at it, and right around 148, it kind of looks shortable, so I just loaded into it, and it's come off a couple of bucks. Yeah, we're trading just above 146, but you know, somebody put a $180 price here. We'll see what happens. I'm just using the 620 on this, and we'll see what shakes here. Basically, it looked like this. You actually had one cross here, but that didn't break down, and it turned back up. And when it got up here, you notice a couple of things on the 620 chart is that the MACD didn't make a new high, so it basically made a lower high. So that's suspect when you see that happen. So once you get the cross here, you can come after it, or you can just try and anticipate it because you're seeing it make a new high, and you're already starting to see the MACD get into a little bit of trouble here, so you can come after it in here. That's, you know, and I'll do that mainly because I'm a maniac, not like it works perfectly every time. Another one that I was long on the way up, but now I'm actually shorted into this move above 171 is NVIDIA. And yeah, I know you guys probably think I'm all nuts, but I still think this is a trader's market, and I think you have to be ready to move in either direction at any time. And when it looks the ugliest, like it did on Tuesday, that's usually the time that you turn. And so you, like I've been talking about this in the last 3 or 4 webinars, what you need to do is from your buy and short watch list, my suggestion is to have 5 names to 10 names of each max. This allows you to watch a small handful of names very closely in conjunction with the market. And it just simplifies matters when you have this market that does nutso things on a moment's notice. Okay, so you've got to watch out for that. And I find the best way to handle that is to have a small group of names that I'm watching. See, I think we're going to roll over here. I wouldn't be surprised if we do. Palo Alto Networks going below 146. Look at NVIDIA is below 170 now. And so I'll just focus on them. So I pick on like Netflix, Facebook, NVIDIA, Tesla. I'm trying to remember what other ones. I have been working on Palo Alto Networks on the short side previous to the earnings. I'm not going to do anything on earnings. But now that it's gapped up, you know, I hit it on the short side, and here it comes. We're below 146. We'll see what happens. This is what it looks like right now. But you sort of had a MACD cross up here. But like I said, when the MACD starts to get a little funky and flattens out and the thing is making new highs, I'll test out a position. If it starts to work, then I can lay into it some more and just kind of play it by ear. But you got to be really quick. And over the last couple days, I have tested some things out on the short side. I've gotten dinged. So, you know, but I'm out quickly. So it's not like it's been all success every time you try and hit something that's rallying. Now, of the names we have on the list, we'll go through Electronic Arts. This one had a pocket pivot. It broke out on a pocket pivot on Wednesday. And, of course, it's coming right back in. I would still watch this one for a possible late-stage failure. And we may end up taking it off the list pretty damn quick. So You're also noticing, I would keep a close eye on, because I talked about all of these, I think, in a short sale piece over the weekend. Watch Take Two, it's kind of extended. And Activision, which actually was buyable on Tuesday right at the 20-day line, has broken out, and now it's pulling into the 10-day. I don't know if that makes it actionable in there, but these are all related to Take Two, which is the big leader in the group. But like I said last week, these things have had huge moves to the upside, and if you look at Take Two, that thing is parabolic. And I would not be buying it up here, but I'm just wondering if the group is similarly parabolic, okay, and just breaking out of these little patterns. I think they could be susceptible to a breakdown, and I think that's something you have to watch for. And of course, you want to be flexible with all that. So I'm long, by the way. I'm also long the UVXY on a 620 buy signal at around 28.50 this morning, I think it was. Pre-open. Let's take a look at that. You guys want to look at that? I'm assuming you do. But let's just kind of blow this turkey up. And you can see, come on, here we go. Let's put it, whoops. Here we go. You actually can see this occurred just before 5 o'clock my time. And so what I did, I came in this morning and I was buying it in the pre-open right along here at around 28.50. And that sort of held. You had an out signal here, but if it doesn't drop below my entry price, I'll stay in and see how it plays out. Now it's just bouncing around, and I would watch for another signal here at around 28.70 and change or something like that. Yeah. So let's see. I'm watching Palo Alto Network still going lower, and also another thing I keep an eye on when the Nasdaq is up at highs or making a new high, I'm always keep an eye on this guy, because you can get a similar type of entry signal, which you did get here just after 5 o'clock my time, so around 5:30, 6 o'clock. Right in here you had the cross. I'm sorry, just right after the open you had a cross in here, but it was already starting to cross just before the opening, and it's up, so I got some of that. Somewhat as a hedge if I'm long anything. The UVXY is a great hedge if you're long anything. But I think in general, you've got to be looking at both sides of this market at any point in time and just be ready to go in either direction. I know that's confusing for a lot of people, but if you're long only, then you lay back and you look for the turns and you come in on the trades that are available. And what are the other, well, if you get a move on Netflix, okay, and that's on Tuesday, and you see it turn a big outside reversal that day, and it gets back above the 50-day, you could buy right there and use a 50-day as your stop. That's a pretty simple trade. Not really rocket science. It may not work, but in this market, you get a lot of this kind of crap, and you can definitely make some hay out of it, to use a farming phrase. But anyways, look at some others. I think some of these, I think we've gone through all the focus list names. Oh, no. We got Vertex. Now, this one actually was very cooperative yesterday. You might notice it. We put it on the pocket pivot. This is a very subtle pocket pivot on Wednesday, and then of course it pulls right into the 10-day moving average yesterday, and it pops right off of it. It's heading back to the highs. So if you're in that one's working pretty well, and it's hanging in there. Right now it's up 231, so that's hanging in there. And there are some things to play, but the biotechs have been pretty strong lately. If you look at the big stock biotechs, Gilead is buying Kite, so that thing launched, and I don't know what prompted all of these other guys to just go nuts to the upside, but Biogen, Celgene, it's almost like money is using these as alternative currencies, because I think something is wrong somewhere, because gold keeps moving higher. And you want to say that, people want to say, oh, well, gold has moved higher because of North Korea and the fear bid and blah, blah, blah. But the bottom line is you're now breaking out of this range, and it's occurring after you had the news on Monday afternoon and the market sell off on Tuesday. Market turned around, and of course the news is kind of shrugged off apparently by the market on Tuesday, but gold continues going higher. Why? If it's just rallying because of North Korea, then why isn't it coming back in? because there's something else going on here, and I'm not. You got any idea what that might be, Dr. It's just like you're seeing the cyber currencies going nuts.
Well,
On the upside, go ahead.
There's a correlation between when there's unrest in various governments and accounts are frozen or banks are frozen and things like that, Bitcoin will rally. And this has been a loose correlation that's existed for the last few years. I would say it's much more pronounced now because now we have, finally, we've got the institutions that are now waking up to the potency behind this technology. So I believe that gold is, while it's the fear trade right now, Bitcoin is going to become the new fear trade in time. And time, I mean
well,
that.
It's down 30% today. You're aware of that, right? This at least.
Now that's GBTC. It's actually at new highs.
What is?
Bitcoin is actually at new highs as we speak. It just
really, even though this guy is getting clocked.
Broke 4,800. It's at 48.35 right now.
Interesting. And why is the ETF getting clocked?
Because it's an ETF, it doesn't track very well, and you have these. Sometimes you have loose correlations between the GBTC and the price of Bitcoin, but you can also use that. You can arbitrage those kinds of trades. So this kind of movement, it's down right now 20%. If you believe Bitcoin's going to go higher, this is a good pickup point to buy more GBTC.
Okay, I don't know.
But also keep in mind it's gotten ahead of the
I don't trust it myself. When you get that sort of action after a parabolic move like this, I don't really trust it. But I guess I would stick to the actual Bitcoin itself. Anyways, but I think that is reflective of a need to move into alternative currency. Something nasty is lurking somewhere, and that just seems to be what I'm sensing from the way things trade, the urgency with which money is moving into stocks at times. It almost seems like it's just being stashed, and they're big stock names like the NASDAQ names, and now you got the biotechs are rallying because maybe there's some intrinsic value that's going to be worth a lot more when the dollar just collapses. So I don't know. Somebody's asking, how about swing trade UVXY? That's what I do. I swing trade the UVXY using the 620 chart, and I wrote a long Voodoo report 2 weekends ago on that exact method that I use. So Voodoo report is now a separate service, so if you want to read about that, you need to be a subscriber. Old subscribers are members that were around before we sort of broke up the services into different pieces so people could pick and choose what they want. They're grandfathered in for all of them, so you should get the Voodoo report, and I don't know if any of you read that a couple of weeks ago, but I basically explained how I trade the UVXY. So I don't try and time it in the sense of trying to figure out what the longer term trend is. I'm trying to catch inflection points in the UVXY with the idea of catching some of these big moves that you get. Okay, so you need to read that. And if you don't have the Voodoo report, then you need to subscribe to that. Very good. The report is right here on my desk. Cool. Way to go, Steve. So Jackie, if you're interested in how we swing trade the UVXY, you might want to take a look at that. But I'm not giving it away here. I talk about it on the webinars all the time. But I did a write-up so people have something to refer to. All right. So where were we? Any other questions? Any questions about? Go ahead.
There's another point. Interestingly, I'm just looking at the monthly chart of the U.S. dollar, and this is the first time. This is the first time since 2010, actually, that the dollar has dropped this much this year. I mean, this year alone.
You're right. So this you're looking at.
I think the dollar's the tallest standing midget, and yet it can't hold its own. Maybe that's an ill omen of what's to come. Maybe finally all this is going to come home to roost.
It seems like it, and I think something nasty is happening. I don't know who's that. You were talking earlier at the beginning of the webinar about some article or something that you read or heard, and some guy talking about, you can make a bunch of money being short the market, but the whole world is in a shithole, basically. So that could be a situation. Yeah, I mean, I get I was reading David Stockman's articles, and if you really want to get depressed, you should read his stuff. I mean, It's about as uplifting as having a boulder dropped on you, but it's pretty depressing. He's predicting that Trump will eventually be driven from office, and he will be the orange swan. So I thought that was pretty funny. But he's pretty negative. But I would say, from a rational standpoint, if you understand what governments have done, $20 trillion in debt, now they're going to raise the debt level. I think the dollar has figured out that we're screwed, and so it just keeps coming down. And that's what it looks like on the daily chart. So anyways, and gold is going higher, and like I was saying, with gold, it's continued to go higher ever since it had this undercut and rally move. So here's your undercut and rally. You undercut this low right here, and this is the low right there. And so you undercut it and you turn. And so you could have bought it using this as your stop, the low here, which I think is like 115.80 or something like that. And it's continued to go higher. You had a pocket pivot here at the 50-day moving average. Let me show that here. You had supporting action here. No other pocket pivots since then, but it's gotten support off the lows every time it's pulled back, and it keeps going higher. Despite the fact that allegedly, the rallies in here and in here and in here were all caused by fears about North Korea. No, the bottom line is this thing already knows something, and it isn't North Korea. It's something broader and deeper, perhaps, and that's why it just keeps going higher. Hey, that did that at the right time. Little emphasis there with that thick line that I didn't even.
This is also the first time. We have to go back to 2011 when gold and silver had those huge rallies. But this year, gold has been trending higher all year. Well, it did that in 2016 because there were also obviously worries out of China at the beginning of 2016, which sent gold skyrocketing about 20% actually those first 2 months. But this year, we have a different host of concerns, and some of these concerns have been with us for years now, and I think they're just getting long in the tooth. This QE bubble its days are numbered. Can't continue at this pace.
Let's see here.
Interesting. Silver's been lagging, but that might be a trade as well because silver and gold move together.
Yeah.
More or less.
Here, I like this. You guys remember this?
Tanks, miles of pipe in tip-top shape, takes constant attention. Drones are doing it with HD imaging.
I'm going to, can I skip this ad?
To help Chevron protect all that's going on down here. Keeps things looking up. Technically, you're looking down. Noted. Doers. Going to new heights to find better ways to do doers good.
I guess we're doing free advertising for Chevron, so. But I love this, if you guys remember this.
We just saw a pack right here on Bond Income.
This is an old video of...
joins the company. All right, Gil, welcome back. Now, let's point something out here. Last time you were on, you said, forget about the stock markets. You got to get back into gold and silver. Well, the stock market had a gigantic rally last week. You missed that.
Yes.
And gold and silver dropped significantly. Are you prepared to admit that you were wrong?
I'm prepared to admit that we had a very sharp rally last year, and I think you actually nailed it on the head early in the week when you said that we were seeing an asset allocation shift out of treasuries and into stocks, and I think that was what was going on.
Anyways, I remember the heyday of silver back then, so, and I think Stuart was giving me a bad time because silver was down on the way up for a couple of days, and from there it went up to $50. You remember that, Dr. K?
Yeah, well, I remember when we put out a piece also about calling the silver breakout because the gold breakout was set like candy from a baby, and it doesn't happen often, but it happened. It happened in 2011, and then when silver topped and gold topped, we put out a piece on that as well because it was a textbook top. It was a textbook climax run. So even though we appeared, to like, we did nail it, but it was pretty easy to do. It was a lot easier to do than than more recent markets, which are far more challenging.
Well, it's starting to rally, and I think that it might be worthwhile looking at it because it does look like you did have a pocket pivot in here. So as you're coming up, well, you're trying to come up off, I guess you could call this one too a pocket pivot. because it was underneath the 200-day and it gaps up above it, and that actually looks pretty decent. So anyways, but I remember those days when silver was rocking and it was moving in sync with gold, but now it's not, or it's starting to now, I guess, over the last couple of months. But for a while, it was sort of languishing. In any case, somebody's asking about TMV, interesting as a UNR. This is a bearish. I guess you could look at it as an undercut and rally if you wanted to. This is a bear ETF, so daily 20+ year treasury bear. So long treasuries. If you're long this thing, it's short treasuries rather. So long, short the long maturity treasuries, 20 years or more. Okay, let me just get that one straight. In any case, yeah, that looks interesting too. But you see all this, and things just don't look right, and that's one of the reasons why if I pick off something like a Netflix off the 59, I'm not holding it long enough, and I don't get the full move because I'm really concerned about what is wrong with this market, and that somebody's going to yank the rug out on you at some point, and I think that's definitely a possibility, and I think that's a risk on the long side of this market. So, anyways, so where were we before I got sidetracked with my narcissistic video? I think I look pretty good on TV, so personally, but anyways. My mom thinks.
Yeah, what happened?
Yeah, what happened? I don't know. That was 7 years ago. I'm 7 years older, or 8 years older now, I think. Something like that. Anyways.
I'm kidding.
Okay, let's look at some other names. These are some that I was talking about. Okay, you got Workday has broken out. It's extended, so I'm not going to buy it here. All right. Salesforce broke out on earnings a few days ago, and it's trended higher. So all of these are actually breaking out and moving together. I don't know if that's a good thing because a lot of these names are way up there. And you look at, say, Now on a weekly, you look at Salesforce on a weekly. I don't know. Could this be a hot new area of leadership for the market? Well, it kind of has been for the year because all of these have been coming off their lows. And you can see that they've been in uptrends for most of the year. So, maybe they're long in the tooth, so I don't know if I'm all that hot to be buying these things here. And what would you be looking for? New merchandise in the form of. We were looking at this one the other day, Dr. Kane. We probably should have put it on because it's gone higher. And I've been watching this name for a long time. I think I started watching it in here, and I believe I mentioned it to you way back then. But it was just kind of halting. It wouldn't go anywhere. And now it's finally getting some momentum as the biotech get it. What's that?
What makes it tricky is, when I mentioned it at the beginning of the week, what I liked about it was not just a pocket pivot, but the fundamentals, which is probably why we talked about it before this week, weeks prior. But I just, in the context of this market, the market was in a downtrend, but this one was holding its own and it was bouncing off the 20-day. But as we all know, on Monday, when I liked the stock a lot, and that was the buy point, things were really tenuous on Monday, and so
well, they were right, and we decided to pass on it because the long side did not look good at that point. So, and like the high risk route to take, as it turned out on Tuesday morning, if you bought the gap down sell off, you could have scored big on a number of names. But the thing is, are you really going to do that? So you got to sit there like a deer in headlights and wait for something to give you a signal, and then you go long, and then you're scared to death that it's not going to work. But but that's how this market rolls. So, but that one worked. Another one I've been watching that's a cheapie is this OraSure Technologies. That actually had a pocket pivot yesterday off the 20-day line. I think it closed right at 2 cents above the 10-day line. Yeah, so that one looked okay. I saw this other one, AERI. And this one had a pocket pivot yesterday, but it's extended from the 10-day line. Let's see. Anybody got any hot biotechs? I know, JT, you got to have some. Probably have some hot $10 biotech. Out with it. You had Bluebird, was another one, took off. Look at that. I mean, that was when Kite got bought out by Gilead. So this all of a sudden isn't a hot area. And so I'm wondering, is this going to be the new leadership area of the market? If it is, everything's way extended at this point. So I'm trying to. There's another one, BLCM, Bellicum. Bellicum is another one. That's a cheesy one. But if you look at Alexion, that one had a pocket pivot yesterday off the 10-day line, just like Vertex had a second pocket pivot yesterday off the 10-day line, and all of these are extended now. So you're either on them at the point of impact at the 10-day line, or you're not. So, and I don't know, I see Palo Alto Networks continues going lower, and NVIDIA is going lower, and I'll tell you what my thinking is on this. I actually went long this along the 20-day line, and I've been watching this thinking it's going to break down again, but it's making one little last hurrah up to the highs, and I think that's it. And in fact, it's starting to act like that's it. But and so I'm willing to short it here. I just use this as a stop over here, which is 174.56. You come after it about 171 and change. You got what, 2-3%. Probably would keep it tighter than that. But also, you got to watch the 620 because it's you have the same situation here with the MACD. You're starting to cross in here, but it's up and it's down and it's back up near the highs. But notice how the MACD is trending lower as it's holding along the intraday highs. So at that point, you say, okay, let's try short here. If this thing turns back to the upside on the MACD, then I'll just be out very quickly. So EXEL, yeah, there's also Exelexis, I guess it's called, and that one's also moved higher. So, but see how far that one's way up there. So I'm a little skeptical as to whether this has a lot of upside from here. And then you have Exact Sciences has been cruising along, but if you look at this pattern, it's had a long move also. So a lot of these things don't strike me as new merchandise. So if we're starting a glorious new market trend here, I would expect that we would see some new merchandise showing up that is conceptually, the business has something exciting, and maybe it's coming out of an earlier stage base. So, it just doesn't look right. Everything to me looks like a trade on the long side if you're really tricky. And I'll show you some other ones. Amazon undercut these lows in here, okay, on Tuesday and rallied. Now it's up to the 50-day line. Guess what? That becomes a short near the 50-day line, okay? Google, and to me this just underscores how random some of this stuff is. Google, you can see, also undercut some lows in here, along here, and then turn back to the upside. It had a pocket pivot yesterday at the 50-day line. It's holding the 50-day line. But you know what? I don't think this is a buy here. It may very well turn out to be a short. Now this, of course, brings us to, see the markets were coming up. We're up 72 on the Dow. The NDX is now just turning red again. So here's Tesla, which I think could be a late-stage cup with handle. And it's kind of dropped out of the bottom of the handle. Now it's rallied back up to the lows of the handle. So if these are the lows of the handle, it's kind of rallied up, and it's not precise. And just above the 50-day line. But that's about, what, 4% past the 20-day, or actually, no, 3% past the 20-day line, something like that. Well, how many percent is that, Dr. K? Well, 2%. So it's really not too far past the 20-day line. And then it's what, let's see, it's about 4% past the 50-day line. So that's not really out of control in terms of the rally above the 50-day moving average and the 20-day exponential moving average. So this could still fail, and if it doesn't, and I actually would lean that way on this. I'll play it for a trade. If you push it up through the 50-day line here, and I can see the market's right now, I would go long that and just catch a few bucks out of it, and then look to unload it, and maybe even go short again if it rolls back through the 50-day moving average. And I'm going to bet that it eventually does. So that's my call right here, right now. Tesla will eventually go lower. You'll see it at 300 within 2 months. Is that too bold? Do we do that kind of stuff? Do we make bold predictions like that? So I predict Dr. K will successfully catch the guy who hacked his cyber currency account, and he'll get his 150 million back. But Dr. K, if you do get it all back, you have to slide me over at least 10. Okay? Can you do that?
Who just said that?
What?
Who said that?
Isn't that what you were talking to me about earlier? That your initial stake in cyber currencies?
That's what the lawyers have said.
Yeah. So
but what do they?
So I hope it is worth that. But if it is, and you do get back that money, don't forget your buddy. Okay.
Yeah.
Anyways, I mean, I hope that's the case. That would be awesome. And nobody deserves it
It
more
would
than
be.
you.
I'm really not holding my breath.
Anyways, and nobody deserves that more than you, Dr. K. Anyways, Opiant, oh, I like this. Opiant Pharmaceuticals. Yeah, that's way up there. So, yeah, that's another one. So, they're all over the place. And, you know, to me, I don't know. I guess it's just like all of a sudden money slammed into these names, kind of catches you unaware. Some of these have been trekking higher for a while. You can see this one has, but it was buyable around 4. If you want to like a $4 stock, you guys, and you're jonesing for something really cheap, Shift Pixie posted a pocket pivot yesterday. It's running into resistance at its 20-day moving average, but that's in a garbagey position here. So maybe that is going to set up and take off again. So I don't know.
You know, you were saying about the oddity of the biotechs moving like they are, and we know that the central banks, for the first time in history, are majority shareholders in a number of big cap and mega cap names, because you know, like we said, the money's got to go somewhere. All this money printing,
Right.
they got to put it somewhere. And so I think, you know, things like biotech and rather Biogen and Amgen, those kinds of names are the beneficiaries of central banks having to buy the most liquid names out there.
Yeah, I think so, and I think they do it as a way of putting dollars into something a little more tangible, I suppose, companies. I can remember in 2008, I forget who it was it Bill Gross or somebody saying that if the bond market tanks, what you want to own, if governments go under, and governments go under frequently in the history of humankind, companies tend to outlast governments, so you would be better off owning corporate bonds than you would government bonds. So now I'm thinking maybe you're better off owning stocks like Amazon, Google, Apple, whatever, as an asset. Even if they do decline in value during a bear market, it's not going to go kaput like the dollar is. So I don't know. It's a little unusual what's going on and the things that you see happening here. So okay, so Nvidia, we're sitting at 170. You got a little over $1 in that. I'm not partying just yet, but it's starting to work. Palo Alto Networks now 145.57 on the offer and dropping. We'll see how that pans out. Notice the UVXY is continuing to turn back up to the highs of the day, and so are the SQQQs. So those can work as decent hedges if you're trying to hold some long just to see if things will play out. And if you're using the 620 chart, as I discussed in the Voodoo report of two weekends ago, I think it's helpful. So, because you don't need much. Anyways, like I was pointing out earlier, the opticals are still dead in the water. Light is probably a short on rallies up closer to 59 at the 50-day moving average. You have this Aclaro, which is a piece of garbage. You have Sienna, which busted 10% yesterday after earnings. So this whole group, to me, looks like trouble, and that's one of the reasons why I'm wondering if this one is going to eventually be a short. So I'd be watching for a bust of the 10-day moving average. That could happen. So anyways, any other questions? Anything about individual stocks? We got a few more minutes left. Just want to make sure I cover any questions anybody has. But you know, if I had to summarize the market here, I think you kind of have to be attuned to this sort of random action. You had some basis for this on Tuesday, where you had a number of stocks that had been beaten down, came down to area support, like Momo down to the 200-day line. You saw some other names like Amazon and Netflix come back above. Well, Amazon undercut and rally off the prior August lows. Netflix comes back above the 50-day. Tesla comes back above the 50-day. When you see that, you can play that. But you know, how far they go is anybody's guess. So you saw like in Square, you had something like that occur, but there's no pocket pivot or anything in here. It just pops above. But I figured if this comes up near the highs, it's probably a short. And it is starting to roll back in. So, and it's also late stage. This is not a fresh, situation. You can see the move. It's somewhat quasi-parabolic. So when you go through a lot of patterns on the weekly charts, or a lot of stocks on the weekly charts, and you see the patterns, you'll see that everything is in sort of a later stage extended position. So that's why if you're trying to make an argument here that we're starting a glorious new market uptrend, it's hard to figure out where you have things in first stage base positions. Where, because Square, when it first came out here, Okay, this is a first stage breakout here. Of course, we were on to it down here. That's where we usually get on these things. And that's the first stage. So I don't know, this could be second stage, this could be third, and this could be fourth. So you're probably getting later in the move. Now remember, late stage is as late stage does. Just because you can call something a later stage base doesn't mean it's in danger of topping immediately. It could still flounder about or even break out and go higher. But once you start getting the 4, 5, 6, 7 bases, you've got to be on the lookout for potential failures on the downside, which can happen. So that's another example of something that's just way up there. I was looking at Yelp. Something like this. I don't know. Grub is related to that right now. That's in a nice little tight flag trying to come out, but that looks sketchy too. So I don't know. A lot of these look sketchy to me. They're just way up there, and so it's hard for me to think we're at a new bull market other than just a reaction move. Zebra Technologies, yeah, that's okay, I guess. That's what it looks like on the weekly chart. So it's coming up a big cup formation, which is like a punch bowl and could become a pod. So buying it here is low risk, right, because you're buying it close to the 20-day moving average. I don't know if this is going to be some hot new leader. Yex is going to report earnings next week on the 6th, which would be, help me out here. What's the 6th, Dr. K? Is that Wednesday? Yeah, that's Wednesday. So, okay, so they're going to report on Wednesday, and it's just kind of flopping. Look at this weekly base. That is about as incoherent as anything I've ever seen. The ranges are too wide, and it just doesn't do it for me. So look at all this movement. So I don't know. Maybe it has some big move after earnings, maybe not, or maybe it just ends up like Nutanix, which has a nice move after earnings, but it's basically now up 23 cents and giving up almost all of its gains for the day. So it's working on it. My guess is by the close it'll be red. How's that? Is that another bold prediction? I'm full of them today. Vive is an old friend of ours, which we took off the list before it broke apart, and now you notice it's rallying back up here, and this could become shortable in here because you're coming up to the underside of this base, okay, right there. So that's overhead resistance. You're right at it. You're almost meeting up with the 10-day and the 20-day. Yeah, it could go a little further. If it got to the 50-day, that would probably become a very juicy short, but it may not, depending on what the general market does. Remember, how far things rally is always a function of, well, I'm not going to say always, rather that's probably not being precise, but most of the time it's due to the general market. So if the general market's rallying and the general market stops rallying at the same time V is here, well, this will turn out to be overhead resistance and it'll head lower. If the general market keeps rallying, however, then you might have a situation where it just keeps rallying up to the 50-day line, which is right here, and then it rolls over if the general market goes with it. So I think the market's probably topping right here. Is that a bold statement? Maybe it is. I don't know. We're up 69 on the Dow. The NDX is down 2. I think the NASDAQ 100 names are the crutch here, or the key, or whatever you want to call it. The crux. Isn't the crux? What is the crux? Isn't that the
crux of the matter?
Isn't that in ancient times when they used to build archways, there was a brick right smack in the middle at the top that was considered the one brick that held everything together? Isn't that what a crux is? I don't know. Maybe I'm just free associating again. Anyways, where are we? Fake book. Let's look at fake book. Let's get rid of those random lines. Here we go. It's sort of like NVIDIA in that it's rallying back up to the highs of the pattern. So maybe it runs into some trouble here. I certainly would not be buying it at this point, but you'll see that on Tuesday, it undercut these lows and turned back to the upside. That is your entry point if you're looking to get long this thing as the market turns, and you have to be alert to that. Trying to come into it now, if it holds up here, maybe IBD will tell you that it's breaking out, blah, 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 and I just wouldn't be buying it up that way. I would watch how it comes in to test the 50-day. If it pulls in a little bit, the 50-day is, where is it? Oh, it's way down here. Sorry, I mean the 20-day and the 10-day are right about here. So if it did pull in, you saw volume dry up, maybe that would set it up again. That would be the only place I'd be interested in getting long this puppy. So anyways, where are we? Dow's up 68. I think when this market does top, it's going to do it in a way that's just so bizarre and random. It seems like that would make sense. Any other questions about names? You guys are all kind of quiet. It's a late summer day. Is summer over? Isn't like today the last day? It's the last day before Labor Day or something.
That's right.
So, anyways, I'm looking around. What else do I want to look at here? So a lot of these stocks that are sitting up, looking like they're going to break out, I'll be watching out to see if they don't turn out to be late stage based failures. I certainly would not be chasing them up here, so you don't want to do that. But it's just a very difficult market to navigate for the most part. I was noticing, is it TS? Tenaris? No. TX? No. Ternium. Yeah, that's a steel stock, is it not? Am I right? And there's a pocket pivot today. So maybe steel stocks are going to lead the charge now. So, of course, X is kind of getting close to the 200-day. I'm not really in a position to buy. What were some other ones I was looking at? Steel Dynamics, that looks like garbage. Schnitzer Steel, that's trying to move higher. Looks more like Ternium. These guys might benefit from what's going on in Houston. So, anyway, some other names people want to ask about. Tower Semiconductor, that's extended, so I'm obviously not going to buy that. PetQ, what is PetQ? Petique, that's kind of interesting. Too bad it doesn't trade any shares. 85,000 shares is trading today. Let me check something over here. Whoops. This trades 457,000 shares a day. That looks kind of interesting. It must be a pet store, right?
Well, they actually make vet grade medications for the health and wellness of pets, dogs, and cats, basically in the U.S.
Cool.
So there's obviously a lot of pet owners, I think, who would probably go for something like this. And their earnings and sales have certainly been ramping up strongly over the last few quarters.
Yeah. QTNA, Quantena, Ugly, and what? And VDU? Where? I don't know. I would look at this as being a short because it's just bumping up into the 50-day line. That's what it looks like to me. This doesn't look like something I'd want to be getting long, to tell you the honest truth. So, and that weekly chart just looks like garbage. I had high hopes for this at one time. It's just kind of flopped out and become pointless. So, Alcoa, huh? That's interesting. Well, that just keeps going higher. So, but I think this is an example of sort of a hard asset type of company cruising. I don't know if this is occurring because of the situation in Houston. I don't know. But that's a nice move. But I don't know why you're asking about it now. It's just way up there. But it is something that's been rallying. So just corroborates your steel names. Okay, thanks. I get it now. Yeah, they've been moving, and probably because they've been getting some help from what's going on in Houston. So I don't think anybody's on here from Houston. I know we have a lot of subscribers in Texas, a lot of members rather in Texas, and that's a mess. Anyways, it is now 11:01, so we're pretty much done here. But my view is if you're going to get long anything, you had to do it at least a day or two ago. And now if you're trying to get long stuff at this point, you're probably late. And so you want to see how things pull back. And if we think that things are setting up again, we may put more names on our on the focus list. We just added Vertex, which I think is working well. That's a better name, I think, than Electronic Arts, which is kind of sucking, and it may start to break down. So if you're buying it along the 10-day line, make sure you're using a very tight selling guide, like either the 10 or the 20-day moving average. So someone says, I am from Houston and in here. So how are you doing, Mark? Are you okay? I know we met at the mini conference and traders dinner that we had back in March. So I'm assuming you're not. Did you get flooded out? Yes, I'm okay. So you didn't get flooded then, I'm assuming. Anyways, no, but all around me. Okay. Yeah. So yeah, that's got to be difficult too, to see all your neighbors just getting smashed and you're okay. Well, that's good to hear. I hope any members that we have in Houston are doing okay. And you've got internet service too, so that's good. Anyways, that's good to know. Good to hear. Anyways, that's all I've got. I don't know where this market's going to close, but it still looks kind of goofy to me. So
Probably needs to digest the gains,
yeah,
the sharp gains it's had the last couple of days.
yeah. And like I said a little bit ago, you want to just see how things that are extended. You want to see how they pull in. Maybe they do set up. I mean, we could continue going higher. I mean, I'm not going to say that we can't. I just think that you're looking at a lot of late stage situations that don't really look like newer merchandise or first stage setups that would constitute what you would want to see at the beginning of a major new market uptrend. So anyways, that's all I've got. You got anything to finish out with, Dr. K?
Yeah, I think, you were saying that we could, well, I'll just leave it as we could baby step higher like we did in July to new highs, and we did that in April, and then we did that in February. And after that baby stepping happened, then the markets would go sideways and then would have this huge one-day drop on news, on some sudden news event. So, maybe we'll replay that once again.
Yeah,
but that bodes well for the UVXY 620. I've been studying it fairly rigorously in terms of, let's just say that when the market is in some sort of downtrend, like you get a generalized downtrend like we've had in the last few weeks, the odds are greatly for the process working in your favor. So even if you might, in other words, even if 2/3 of your trades are losses, you're closing them out. I've been able to close out trades simulated at less than 1% loss, but my gains are generally at least several percent or higher. So the odds are greatly with you. I'd say 4-to-1 or 5-to-1 in terms of profit loss overall.
Sounds good. Anyways, you guys have a great Labor Day weekend. I hope. Somebody's saying, going to get hammered. Happy Labor Day. Is the market going to get hammered, or are you going to get hammered, JT? Maybe both. So anyways, all right, you guys have a great week, and we'll catch you next week. Take care.
So long, everyone.